Hey everyone. In their latest quarterly conference call, Tesla was able to both increase hopes of a lower priced model and downplay expectations of the $25,000 long promised model in the same conference call. Tesla is able to walk that fine line very, very well. And I'm going to share with you why I think this is the case and what are the wordings that were used that leads me to believe this. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Tesla was asked in the conference call, can you give us a timeline for the $25,000 vehicle? And the vice president of vehicle engineering jumps on the call to say, we're updating our future vehicle lineup to accelerate the launch of our low-cost vehicles in a more capital efficient way, CapEx efficient way. Now, what you'll notice from that answer is the response didn't include the $25,000 vehicle, but the response included low-cost vehicle instead of $25,000 vehicle. Now, what that leads me to believe is this new model that comes out is not going to be $25,000. It may not even be less than $30,000. It might just be something that's lower priced than what Tesla has right now. So it might be just $5,000 less than what they have now, or it might be a little bit more less than that, but it doesn't look like it's going to be $25,000. They downplayed that here in this response to the answer. And then Elon Musk comes on and downplays this even more. So let me share that with you. So in response to that same question, Elon Musk then comes online on the call to say, we'll talk about that more on August 8th, but really the way to think about Tesla is almost entirely in terms of solving autonomy and being able to turn on that autonomy for a gigantic fleet. That might be the biggest asset value appreciation in history. In other words, don't focus on this lower priced model that we have been promising for years. Let's not think about that. Let's think about how solving autonomy driverless car technology is going to add so much value for Tesla stock investors. And this is something that we can raise hopes from investors on for several years to come, because they're going to announce it on August 8th, but it's unlikely that it's going to be into the market on August 8th where people can actually turn on full self-driving and they can go in the back seat and the car will drive itself and there won't need to be any drivers intervening. So this is why I think that Tesla's not going to come out with the $25,000 model. This is why I think Tesla's going to come out with something that's lower priced than what they have today, but it's not going to approach that $25,000. And they're going to spin this as it being a more cost-efficient way to come up with the lower-priced model, even though it's not the $25,000 model. But it's another case, another instance of Tesla promising something for several years, and then when it comes time to deliver, let's not think about that kind of stuff. Let's focus on more future dreams and hopes on something else distant in the future, not what's happening today, not what we can actually deliver today, not what the actual revenue, profit, and cash flow, where those are coming from today. Let's not think about that, because that would paint our company in a light that's not the way we want to be pictured. We don't want to be pictured as an EV company, as a car company. We want to be pictured as a driverless car company, or we want to be thought of as an artificial intelligence company. And that way our company can attract more premium valuations and our stock can trade at more expensive valuation compared to if we were valued as a car company, our stock wouldn't be traded at such. So interesting little answers from Tesla in response to the lower priced model. Nevertheless, it is good news that they'll be able to deliver this and get it out into the market. They're saying as soon as by the end of 2024. That should help spur some consumer demand, because right now electric vehicles compared to their rivals internal combustion engine, they're more expensive and less convenient. And I've been saying that for a while now. I must sound like a broken record, but it's just the reality of what exists. For a certain percentage of the population, it might be more convenient. For instance, even for myself at the university I teach at, we get access to free level 2 charging while we're on campus. So for instance, I teach sometimes night classes that are 3 hours long. I can park and charge an electric vehicle for those 3 hours. But even considering those benefits I receive, the cost of ownership for an electric vehicle for me was, when I last did this calculation a couple of months ago, was still so much more than an internal combustion engine vehicle. For me, the main difference is the increase in insurance cost versus an internal combustion engine vehicle. The higher price I would pay for insurance would offset more than the savings I would receive from the fuel. So whatever I would save from fuel expense, going from whatever I pay every month to essentially zero, it would still not offset the more than amount that my insurance premium would increase with a Tesla or with an electric vehicle vis-a-vis the internal combustion engine vehicle. So even in my case where I get free charging and I have the convenience of charging when I'm teaching on campus, it doesn't make sense for me. And that's why you can understand that electric vehicles right now only make sense for less than 1 out of 10 consumers are choosing electric vehicles. And that's with the thousands and thousands of dollars that consumers are getting in incentives for electric vehicles. So it's understandable that Tesla wants to shift focus away from electric vehicle sales, which are not going in the direction that many of these EV companies had hoped, and shifting more of the focus on this other technology or some other technology that can spur some kind of investor interest in the stock, because as just an electric vehicle company, the interest in the stock would not be so high as it is today, given Tesla's valuation compared to other car companies. So for Tesla stock investors, the key thing to note here is, how confident are you that Tesla will achieve driverless car technology? And ultimately, how much revenue, profit, and cash flow will it generate from that technology? It's not just that, oh, here's the great technology. Once we cross that finish line, boom, we're going to get $1 trillion. That's not how it's going to work. Once they develop this technology, they need to get consumers to pay for it. And will consumers pay the amount that Tesla thinks that they will pay, or the amount that investors think they will pay? That remains to be seen. I think it will unlock a tremendous amount of value for Tesla and others, because Tesla's not going to be alone in this. But how much value it adds remains to be seen. So, an interesting thing to consider. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.